Hello, everybody. Welcome back to Block Bytes. It's the end of the week, and it's time to take a look at what all has happened in the crypto space this week. Starting with the market outlook, and let me first welcome Vicky. Vicky, how are you?
I'm fine, sir. How are you, sir?
Not bad, not bad. The market looks awfully green this time, Vicky. What happened?
Yes, sir. Actually, if you look at there are two things to note here. One is Bitcoin. Another thing is Ethereum plus alts. If you look at Ethereum has not done anything. Basically, it is basically putting in a bearish retest.
Correct.
I mean, the price has not changed compared to the last few weeks, last 2-3 weeks.
Okay.
Whereas you look at Bitcoin has done something very nice. Actually, it has bumped above the major resistances and has gone up to 30K.
Right.
It has touched 30K. So of course, this is like one thing to note here is Bitcoin dominance is on the rise. That is for sure.
True.
Bitcoin dominance is on the rise. So that is for sure. Actually, what I'm trying to tell you is that like we have to be very careful at this juncture because the the fear and greed index is also at the high. It's basically greed. So we have to exercise caution, and from a TA perspective also, we have to be very cautious this week.
Okay.
Taking profits is very important, right? But I think like from the X platform, if you look at my feed, most of them are becoming very bullish at the top. Not a good sign. This is the place to be wary. Actually, you have to be very wary, especially with altcoins. Because Bitcoin has one big narrative, the ETF narrative, and I think that is one reason why it is pumping. Telling you that the 30 to 32 region is a huge resistance. It's bear market resistance.
Correct.
Flipping that region will be very bullish for Bitcoin. So personally, I think Bitcoin is going to be rejected from this area. Of course, after a lot of chop. Not immediately, after a lot of chop, Bitcoin is probably going to get rejected from here. If in case it is flipping 32K, then I think it's time to turn bullish. But looking at the macro and other factors, I don't think so.
Right. A lot of what do you call headwinds in all directions. It's hard to make sense.
Exactly. Yeah.
All right.
Like the only thing is like if Ethereum is also performing well, then I would be very positive, very optimistic here. But Ethereum is not performing. Look at it. Ethereum has barely moved this week, despite Bitcoin putting in more than 10%.
Okay. All right. Okay, so yeah, so be wary, everybody. It might be a little bump in the price, but make sure that you don't fall for it. And of course, keep tuned into our technical analysis videos. You'll get more information there. Let's move to the next news in line, Vicky. This is probably what actually triggered in some way the entire thing. Cointelegraph made a blunder. Somebody in their social media team actually posted a fake tweet on Twitter saying that BlackRock's iShare spot ETF, Bitcoin ETF was approved. And all of a sudden, Bitcoin jumped and touched 30,000. And then Cointelegraph came back and said, no, I'm sorry, we made a mistake. It was a false, it wasn't, it was not correct. And then Bitcoin dropped back. So all this happened in a matter of day, in the same day, I think, in a few hours maybe. And this was probably this is how the week started last week. So your thoughts on this, Vicky?
Yeah, it was actually, I couldn't control my laugh. What Cointelegraph did was pretty pathetic, to be honest, like because he took cues from a Telegram group. Because Cointelegraph actually came up with an explanation where they explained that their intern who was working at Cointelegraph picked up that news, that fake news of an ETF approval from a Telegram group, actually. Yeah. So this is basically even though it was an inadvertent, it seems to be an inadvertent mistake from the part of a Coinbase intern. This has to be taken seriously, actually.
Correct.
And I think one way or the other, SEC is going to, going to observe all this and then probably, use this opportunity to, bash crypto again.
Correct. Correct.
In my opinion,
Correct.
like,
That is true.
in my opinion, at least Cointelegraph is considered kind of a legitimate player here.
Right.
One who's looked upon for reliable news. But this coming from them actually puts them in a bad light and entire crypto space in bad light. Why? Because the way what Bitcoin did that day is attracts the regulators' eyes.
Right. Yeah, I mean, the last thing we want to is to give the regulators more ammunition. So from that perspective, it is not good. And even from a ethical and a moral and a professional perspective, it's obviously not good. People lost a lot of money, right? So that's another thing.
I think that point, this will definitely attract regulators. I'm pretty sure somewhere along the next year or probably next 2 years, somewhere this is going to create an issue. They definitely are going to take Cointelegraph to task. There is no doubt in that.
Yeah,
Definitely, because this is pure market manipulation fraud. There's no, even if he says that he did a big mistake, still will attract a lot of eyes.
Correct. All right, let's see. Well, time will tell what happens. And in the meanwhile, let's move on to the next news. Okay, so this is a news from around CBDCs. We don't get a lot about CBDCs, but here's one. Australia is also thinking of creating its own CBDC, and they want to do a pilot. So with this, they have joined a big group of countries who are interested and working on CBDCs. And I found this very nice website called cbdctracker.org. Basically tells you the state of the CBDC projects around the world. And as you can see, there is only one that is actually launched. This is the eNaira of Nigeria. And there are several which are doing pilots. India is obviously one of them, the digital rupee. And this website actually gives a lot of information on it. And Canada is, oh, sorry, are we looking at Australia, right? Australia is in research. So they are thinking about it. Again, it's not unusual. I think everybody is going to eventually get a CBDC. Most of the countries would. What do you think, Vicky? Do you have any thoughts on
this? This is a nice tracker actually you put in there, you found. It's quite nice actually, because it tells you the status of CBD implementation country-wise, right?
Right.
Yeah. So India is obviously in the pilot stage actually. Correct. I think countries will eventually jump into this bandwagon.
Yeah, they have to.
Because it's a currency, and obviously they will think about their own CBDC.
Right.
So it's an eventuality. Probably some countries might stay away from that. But in my opinion, like government obviously wants more surveillance measures. So they will definitely, not just India. I think most countries will eventually, like 10 years from now, most countries CBDC will be a norm.
True.
There's no doubt in that.
Yeah.
Question is, how are private stablecoins going to compete or going to exist along with them?
Right. I think, I mean, but stable. I have this feeling that you have these two worlds. You have the crypto world, which is on public blockchains, and then you have the non-crypto world, which is the current world, the Web 2 world, where central banks will have their own CBDCs. So here you will have CBDCs and digital forms of money like UPI, and in the crypto world you will have these stable coins like USDT and USDC, right? So these are like two different worlds with their own representation of currencies in there. And then eventually both will come together, because we know like everybody's working on like Swift and Visa. We saw those examples. Banks, they're all working on building those pipes of interconnecting the two worlds together. So that is how I look this to take shape going forward. All right. Let's move on to the next news. This is interesting news.
You can in the video, the CBDC tracker can be, the link can be mentioned, I think, for the users to actually go
Yes,
track it.
Absolutely. I'll put that in the links, like with all these, all the links will be in the description. So yes. Now DeSci is decentralized science. We don't get to hear a lot about it, but since this was something that happened last week, I thought I'll add this to our weekly recap. VitaDAO, which is a decentralized science project, has actually agreed to fund an early stage cancer research company called Matrix Biosciences. And you can guess from this that, what is the biggest use case for blockchains or decentralized science is funding, creating an avenue of funding. So most research funding happens either through institutions or through private organizations or wealthy individuals. But decentralized science want to break that and provide like an alternative route of funding. Think about it like crowdsourcing or around the same concept, but focused on funding of medical research. So this, when I looked at this, I actually went in and checked what exactly is DeSci, and I came across this very interesting tweet from Messari. They are known for their infographics. And this tweet is from April of this year. So it was a fairly recent report. And as you can see, that funding is like the biggest chunk of all the DeSci projects here, right? So funding seems to be the biggest pain area of science projects and research, which makes sense. A lot of money is needed to actually, do research. So, and this is like their ecosystem, and you can see there's a big chunk of funding companies, DAOs and all, and you see VitaDAO in here as well. And then there are the other areas that DeSci is targeting. So I found this interesting. But your thoughts, Vicky, on this?
Yeah, even I went through the news. Actually, it's quite interesting the way they are actually tokenizing IP. I went to the news. Actually, VitaDAO actually tokenizes the intellectual property of Matrix Bio. That was quite interesting, actually. And they themselves have put that they're experimenting with, going to experiment with that. So apart from the funding part that you talked about, this is quite interesting, actually.
Yeah.
And it also, it also has a use case, if you consider that. Because in return for funding, they like, what is it? They can raise fundings through the issue of IP tokens. What they're doing actually, and these IP tokens can actually, can be part of the DeFi infrastructure.
Correct.
So this VitaDAO is quite what is it like? I was literally, it was very interesting actually. I think DeSci is being not discussed that much actually.
Yep. It's
probably probably like RWA, it will take another 6 months to 1 year to people actually talk about DeSci.
Correct. Okay, let's move on to the next news, and we have another news of sanctions and blacklists. So Israel recently disabled 100 Binance wallet addresses, saying that they were linked to the terrorist group Hamas. And Binance being centralized, they actually went ahead and closed these accounts after they had the discussions with the authorities. And also after this, there are around 200 more crypto accounts that they are in discussions with. So this is like another addition to the crackdown on illegal crypto activities by authorities around the world. We've already seen a few examples in the past weeks, and we are going to go ahead. We are only going to go and see more and more as time progresses. So, your thoughts, Vicky, on this?
Two things here. One thing is, this is an assurance actually. Regulators will be now regulators across the world. I think will be watching this development closely because now they know that they can actually, stop people from, stop people and stop, organizations from misusing crypto or for,
Right.
for military violence kind of activities. They can actually, regulators concern will obviously be usage of crypto for these activities. Like, especially the recent report also came that they have been used for terrorism.
Right.
So freezing of accounts, the possibility of freezing of accounts actually, kind of assures the regulators that they can actually, regulate or control the misuse of crypto. So it is a good thing from that part actually.
Right. Yeah. You're right.
The fact that Binance is cooperating with them, it's also, it's positive image for it's positive image for Binance, because
Right.
Binance has always been on the negative limelight. But this somehow says that Binance is cooperating with the regulators. They are willing to cooperate with the regulators.
Right. Okay, let's move on. In a bit of positive news, Ava Labs seems to be pumping a bunch of money in India. They've made some new high-level hires, and they're banking on some Avalanche growth in India. So they've hired two executives. One is the head of India, and the other is the business development lead for India. And the areas that they would be focusing on are ticketing, certification, supply chain, and some other areas. So what are your thoughts, Vicky?
This one, with the Avalanche is, betting on India. I think not just Avalanche, like in the future, we'll be seeing most blockchain networks like betting on India, because here is where the activity, like most activities, and we are also like, we are also leading the people, like India is also leading the crypto transactions happening across the world actually. I think we are second in the Chainalysis report published recently.
Right.
So there's a huge market in India. And I think not just Avalanche, Avalanche is just coming in. In the future, I think many blockchain, Solana already actually has done a very good job of,
Correct.
with their super team, actually has a very good presence in India. So I think in the future, and even Near Foundation and Algorand also recently expanded their wings to India. So I think with Avalanche coming in, it's not quite surprising for me. Like more and more people and more Web3 projects will be betting on India.
Correct.
It's a good thing. It's a good thing actually.
Yes.
Because for all the obvious reasons, a good thing actually.
Right. Okay.
And there's no wonder them recruiting from Polygon.
I think it just poached him. Says
Yeah.
yeah. So it's fine. Yeah, whatever works.
Okay.
Okay. Fine. So let's go on to now. This is a particular news that I included because of you, Vicky. Since this news is talking about, so here there is a crypto analyst, Michael Van de Pop, and he is saying that altcoins could be in the last phase of crypto bear market. What he gives three reasons. First is that they're approaching the halving. Second is the approval of the Bitcoin spot ETF. And the third is the boost in Bitcoin's value in the near future as compared to, say, gold. So he feels that this, whatever choppiness we see or whatever the impact of bear market is on the altcoins, it is only going to last till these three events are there. And after that, it will just be to the moon. What are your thoughts?
Sir, I think I have to disagree on this actually. Why? Because of course, like at the top, you'll always, you can see most crypto analysts coming up with a bullish thesis or if euphoric thesis actually. Though I agree with some of his points actually.
Right.
Approval of a spot ETF could take any direction. It could be a sell the news event, or it could actually, propel Bitcoin to new all-time highs, no doubt. But what must be understood is that all these things will not like prop up altcoins in any case.
Exactly.
Yeah, any case, because I think most people confuse the strength of Bitcoin with the strength of altcoin, which is wrong. Bitcoin can actually crush alts. There could be a flight of capital to Bitcoin from alts. All these things happen. So just because Bitcoin is like showing bullishness doesn't mean that all coins will actually perform well, or we are in the end of the crypto bear market. And more than the spot ETF, what is going to dictate 2024 is actually the macro, especially the yield curve inversion.
Okay.
I think we'll probably discuss yield curve inversion next week.
Yes.
So that is the thing that is going to be actually most important, determining the not just the crypto markets, but even the traditional markets.
Right.
So the fact that I am quite surprised that he's telling that we are in the last phase of the crypto bear market. No, I totally actually disagree with it. We're just definitely not in the last phase of the crypto bear market.
Right. Yeah.
In fact, if you look at the any environment, there will be a relief rally in the
right.
There will be a good relief rally. That's called maybe in Elliott wave theory. So that is the relief rally we have put in 2023.
Right.
Which means next year is going to be probably 2024, and probably 2025 is going to be like, it's going to be worse, it's going to be very bad for altcoins. And him saying that this is the last phase of the crypto bear market is totally wrong. We are probably the last phase of the crypto bear market will probably happen in 2024, Q2 of 2024.
Okay. Yeah, you're right. So
from telling this, multiple factors. It's given you fundamental reasons for that. From a TA perspective, also many altcoins are actually looking bad, very bad. But this doesn't much to Bitcoin. Why? Because Bitcoin has clear that can actually, if Bitcoin is going to pump, it is going to definitely pump a lot harder. And Bitcoin is going to come, it is going to dump a lot not that intense, not that intense. Whereas altcoins or Ethereum, people are actually, selling it off. And one more thing you have to notice that in most altcoins, people are right now sitting at a loss. So any significant pump on the major and mid caps will actually, people will actually start selling to get out of their underwater bags.
Okay. So this one was another, we've already discussed about it. So OFAC actually came out and blacklisted crypto exchanges in the Gaza territory. The two crypto exchanges are Cash Money and Money Transfer Company. They are Gaza based out of Gaza, and they are centralized crypto exchanges. So OFAC obviously found out that this exchange is being used for illegal funding terrorist activities and other things, and they've gone ahead and sanctioned this again. So nothing much to discuss here. We've already talked about it. This is yet another example of how regulatory bodies is going to react when it comes to crypto illegal activities. So let me just go ahead to the next important news, actually. So the new update for Taproot is out, and it promises to bring stablecoins and commoditized gold on Bitcoin, among other things as well. So the folks behind Taproot are saying that they want to transform Bitcoin into a multi-asset network, something similar to Ethereum, and it's only time is only going to tell whether that actually happens or not, because there's a lot of internal dynamics also within Bitcoin when it comes to things like this. Your thoughts on this, Vicky?
It was I was actually like, this is kind of eventuality, sir. Stable coins, gold coming to Bitcoin. It's kind of eventuality, because someone has to bring it, and then it is going to happen now. It's definitely good, actually. And the fact that it's happening on Lightning Network is also like not surprising.
Right.
Again, it's all about usage, how people are going to use it. Because if you look at the recent, you saw a recent data where did you see that where most transactions happened for stable coins happened on the Tron and Binance Smart Chain network, not on Ethereum.
Right.
or not even Polygon. It happened on Binance Smart Chain and Tron.
Right.
So for stable coins, the maximum usage is these two blockchains.
Right.
So even if stable coins come to Bitcoin, whether they'll be adopted as seamlessly as that being adopted on Tron or BSC network, it's a matter of question.
Right.
Whether that will happen or not happen, I don't know.
Right.
But of course, stable coins coming to Bitcoin, like, it's not surprising, or it's an eventuality, like I told. We only have to see whether it's getting adopted.
Right. Right. That is true. Yep. Okay. I guess time will tell. But it's certainly
Exactly.
positive news
Exactly.
for the Bitcoin community. All right. Moving on to the last news of the day. Now, this was an interesting report. These two gentlemen from an accounting firm came out and said that, proof of reserves is actually dangerous. By dangerous, they mean that it is inequipped and inadequate, dangerous and inadequate when coming to accounting of exchanges. So we all know that after the CEX meltdown last year, everybody started publishing their proof of reserves. But then there was another section of the community that said, reserves, we need reserves as well as a proof of liabilities. So some of them started posting the liabilities, but a lot of them have still not posted their liabilities, made their liabilities public. And these two gentlemen say that there is a reason for that, is because it's a complicated procedure and liabilities are not that easy to find. So the whole point that they are saying is that, you still need third-party accounting companies and firms who can actually go in and properly audit these centralized exchanges or any crypto project when it comes to proof of reserves and liabilities. And they've given it their own name, saying called Know Your Assets. It's basically just their own spin on the concept of proof of reserves and liabilities. So I just happened to open up WazirX proof of reserves. Obviously, we have the proof of reserves here, but we don't know anything about their liabilities. And similarly, we have CoinDCX's proof of reserves also. So a lot of exchanges actually publish their proof of reserves, but there is no information or very less information about liabilities. And I think that is what their point is, that you can't get those information easily, and you need third-party accounting firms like theirs to actually do it. Your thoughts on this, Vicky?
I think your summary is very well, sir. Actually, from my side, I'm saying the same thing. Actually, it's first of all, I don't think any crypto exchange will come forward to put their off-chain liabilities.
Right.
That is one thing, actually, because it's business and they know obviously they can't put it up.
Right.
Second, trying to bring it on-chain also won't help, at least in short term.
Correct.
So I think the best right now is proof of reserves only, and we got to go along with that. We have to assume that the liabilities are not that bad, or we have to keep trust on the exchanges.
Correct.
But but from the regulators' point of view, they're not going to go away with get away with trust. They want data.
Yeah, exactly.
So it's a tug of war, actually. Let's let us see what is going to happen, because I think this is because of FTX only. Otherwise, I don't think anyone would have even bothered about asking for proof of reserves.
Correct.
And if you look at even FTX, even without their liabilities, if they have declared proof of reserves properly, then definitely we would have known that they are in trouble.
Correct.
But that was not there.
Right.
So, like what to say, kind of bringing showing the liabilities is an extreme. It's an extreme step forward, because just proof of reserves is so far it is sufficient, actually. Even in the case of FTX, liability was not the problem; it was the reserves itself, asset itself, which was the problem.
Yeah, I mean,
So
yeah, you're right. I think it's only a matter of time.
Regulators will definitely want liabilities also to be on
Of
this
course.
thing.
Yeah, Yeah.
And second, there's one more thing actually. It's a lot more complicated also. Why? Because whether they have the user assets 1:1 or in different assets. So
Yep.
that is also there actually.
Correct.
And no exchange has been transparent about that. There's no way we can know that whatever assets they're having is, are the exact assets that the users actually
Correct.
deposited or.
Correct.
So
Correct.
that is also there.
So many.
It's complex. First of all, it's
So
complex,
many.
right? The right tool is kind of complex, but you have to see, what regulators have in mind.
Correct. Correct. Interesting. Yes. So let's wrap it up for now. This is all we have for you from the world of crypto this past week. I hope you liked it, and we will see you next week with another session of the news recap. Till then, bye-bye.